All right, we are ready. Let me turn this commercial off because it's super loud in my background here. Gotta get rid of
Hello,
those.
hello, everybody.
Yes, this is
Wednesday.
PookiesRevenge, Swinging Bull. We're here. It's the most Fridayest Wednesday I think I've ever had all week. I can't even talk. Yeah, so this stream is for you guys to ask us questions and we'll answer them. It can be anything that isn't short of a free speech violation. But yeah,
Ask us anything.
preferably related to trading. We're just here. We're just people, and we're trying to help you guys get better. So if anyone does have any questions, as I mentioned before the recording, this is a split audience stream. So we're going to have some people watching YouTube, some people here in the Discord. So if we seem like we're talking to other people, it's just the other side of the conversation. So don't feel like we're having a stroke or something. All right, I got Snowflake here. I'm sorry for everyone else. I'm just kidding. Let me go ahead and pull up my screen also. People here in the Discord can see it, and YouTube as well. All right, does anyone have any tickers you want to look at? Mr. Stocklock Profits asks, how many tomatoes should we throw at Snowflake when he acts out? I would say if he acts out more than once, you shouldn't have any tomatoes a second time. Snowflake votes for a bushel. Do we have other needs to cook? All right.
I did want to mention, if anyone entered those UPST cash secured puts I alerted the other day, we are up 10% of the premium right now. UPST had a nice push a little after, kind of right around lunchtime, around 12 noon Eastern. UPST had a pretty nice push up. So we're already in the green on those. So that play's working out just fine. So congrats to anyone who played that with me. And yeah, what else do we got? How's SPY been doing? Let's look at it.
Yeah, and you can see also with UPST here, it didn't really have to move a whole lot, right? That's only a 2% candle right there. This is on the 1 hour time frame, and those contracts are nice.
Yeah, I mean, we really didn't need a lot of movement on it, and of course, the theta decay is working in our favor when we're selling the puts.
Absolutely.
So we're already in the green. I'm still holding it. I haven't closed anything out yet. My price target's probably around 50%. I'll probably take some profit around there. So
that's fair, man. That's the way to do it, right? Let the time work for you, not against you.
Yeah, exactly.
Oh, that's good stuff.
All right, so what's Mr. SLP says Tesla earnings today? What are you thinking?
I think it's going to go bad, personally. I don't like Tesla from a valuation standpoint. I think they need to come back down, resolve some of this price action here, and just get back down to reality. I think the future company potential is very, very high, but I think we just went too high too quick, and we've seen this time and time again, right? Every time we have these massive runs to the upside, it just has to come back down and resolve stuff. So you can see overall long term, this is coming down to valuation. It's just a matter of time before it gets there, in my opinion. And then from there, once all this stuff is resolved, then I think we'll be in a much better position to kind of move in one direction or the other. But it's got to come down and at least see how the market responds to that valuation level and then build into that growth. I mean, this thing, it's probably going to be a super volatile earnings because a lot of eyes are on this.
Right.
I'm just not bullish on it personally, but earnings, there's really no way to know, right? We just have to see where the volume cements, and sometimes the direction doesn't even match the result of the earnings. So it's very risky to trade these with confidence. You just have to be careful.
Yeah, and then we got to take in consideration the guidance because we've seen earnings before where they beat revenue, they beat EPS, but they put out a bad guidance. So we've seen that a lot. Just be careful of that, you guys. We got to make sure we look at the guidance and see what's going on there to help determine if it could be a future play for us in the future. I did post some things regarding Tesla in the free live stream open chat, and it's basically what the price of Tesla did one day after they announced earnings. The last earnings they announced on January 24th of this year, they were up almost 11% the very next day. And the earnings before that, they were down over 6.5% the next day. Just, something to keep in mind. Earnings plays could definitely be a crapshoot. So if you do play it, make it a lotto play. Maybe just use some profits from a previous, plays, and then, it's something you'd be willing to lose is kind of like a lotto play. So.
Absolutely. And sorry, I just had to draw that real quick. Yeah. So, and Penguin made a perfect point here. Sometimes all it takes is an Elon tweet too. So don't ever hinge everything on technical analysis, because that is the last factor when it comes to a trade is identifying the technical setup, getting the confirmation. That's a very small piece of the puzzle. Right. Even with a lot of momentum trades, like earnings is a momentum element. There's not a lot of other stuff you can base anything on other than the volume. Volume dictates these price movements, especially after hours when you got that wider bid-ask spread. I mean, you're at the mercy of the rest of the market at that point. So really quick, Daydreamer, can you give a quick infomercial on what MA 1050 and 100 are, or am I in the wrong area and should I go back to Trading 101 channel? And Tesla just awarded a Korean company a $2.9 billion contract. That's pretty significant. That's a pretty big news.
Yeah, I would say so.
As far as the 10, 50, and 100 moving averages are and whether or not you're in the wrong area, no, you're in the absolute right area. We want you guys to ask questions. We want to help you learn. Well, I'll leave the Tesla 1 minute chart up here, but I am expecting bearishness personally, but it's come down, hasn't really violently rejected yet to the upside. So we'll just see where the volume goes. You can't trade this based on anything other than levels and volume at this point. So we'll just kind of let that cook.
We're getting some action right now on Tesla, matter of fact.
Yeah, it's doing the whole 50% retrace thing. So I will draw fibs really quick just to kind of demonstrate. Okay, so basically this is going to be the zone that people are going to be looking for. It's got to make a decision to the upside or the downside. So it looks like it's rejecting here at the 50 and coming back down. So we'll just keep an eye on that, see how it goes. But ultimately, it's volume, it's action, reaction. There's really not much else you can do to identify these. So if you're not a scalper or you're not comfortable reading these volume things, it's really, really risky to try to trade anything short term on this particular stock right now. Like, you just have to let it resolve. Now, a couple things are true on top of that is, A, we're dealing with momentum and impulse right here. So if we can't trade that, we can always wait and see which direction it goes, and we can trade that direction a little bit more stably. Obviously, if you're in options and you're holding them overnight, you can't really do anything because you can't trade right now. But if it falls down really hard, you can trade the bounce, or you can trade the longer term recovery after H-shaped continuation most of the time. So for those who have been here for a while, you kind of know the drill. For those who haven't, we can cover that more in depth when there's not such craziness going on with Tesla. Right. But I'll leave that up for now. And I'm just going to go over here and I'm going to uncheck the symbol thing so we can just pull up a different stock. We'll pull up, oops, sorry. Put Tesla back there, and I'll pull Disney over here. Okay. So the question was the 10, 50, and 100 moving average. So what a moving average is it takes the number, in this case, it's 10, 50, or 100. Those are lengths. So what it's going to do is it's going to take this candle, blah, 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 10 candles in a row, right? And it's going to summarize those. It's going to look at the closing price of those candles, and then it's going to average them. Just the closing price is just the average. So if I add MA indicator here, okay, and I'll just set this to 10, 20, and 100. Okay, so 10, 20, 100. We're just going to use red, yellow, and green. As you can see, the red one here is 100 period moving average. So that's summarizing 100 candles, and it's plotting one data point based on the average of those closing prices for each of those candles. Does that make sense?
Absolutely.
All right. So with 100, since there's more data, the line typically is going to be smoother. It's not going to be as jumpy because there's more data. It's going to take a lot more to influence that number. So you're going to get smoother lines. These are typically more reliable. Also, there's stronger supports and resistances in most cases. 20 is a fifth of that. So you're dealing with 80% less candles at that point. So you're dealing with a smaller data set. So you're going to take 20 candles. Okay. So in this case, let's just look back 20 times. Okay. And then you're going to have, oh, that was weird. My computer did some weird stuff. So basically, it's just going to take these candles right here, summarize their closing prices, average them, and then plot it on a line. Right. Mm-hmm. So that's what you're seeing with the yellow line there. Then when you have the 10 period moving average, you're doing the same thing, but with 10 candles. So you're only looking at these. So does that make sense? I hope it does.
Yeah. Yeah. Okay. No, it definitely makes sense.
Yep. So the shorter the number, the shorter the length, the jumpier the line will be. The more reactive it's going to be to price. The longer it is, it's going to be smoother.
Yeah. I like my bigger MA time frames, like, you know, 100 or the 200 MA. those are, for me, those are going to be more directional moving averages to kind of give me a bird's eye view on the overall trend. You can kind of look at the bigger lines. Like Pookie has looks like the 100 is that red line. So that's going to be like your bigger directional moving average. Right now it's kind of just sideways, right?
Yeah.
So, you know, the overall trend, you know, right now at least it's kind of just neutral. Until that red line kind of makes a move up or down, right?
Yeah, and there's 5 or 6 different ways you can use moving averages. We teach that in the Pennybois Advanced. One thing moving averages don't show you is volatility, because as you can see here, there's been a lot of price action on both sides of this moving average, but it's flat. It's not really going anywhere. So the first way you can use a moving average is to determine the slope. That tells you generally which direction the trend is moving. So if I look at the shorter period moving averages, I'm looking at this trend, this leg right here.
Mm-hmm.
These both have a positive slope, the shorter term ones. This is because it's an upward movement on the shorter term. It doesn't tell us the volatility within that time frame unless we look at lower length moving averages like we're doing here.
Right.
So if I go back in time, you can see all these lines have negative slope. They're all pointing down. That's because this is a downtrend. They're all below the moving average, which means the price over the last 10 periods, the last 20 periods, is below the historical average if we look back at the last 150, 10 candles. So that's kind of why we want to look at those for their slope.
Mm-hmm.
Another way we can use moving averages is as a dynamic support and resistance level. You can see right here that acts as a support level. It gets tested, rejected, tested, rejected, tested, rejected. Same with this one here with the 10. This is a very strong downtrend. It hasn't broken above that 10-period moving average. So it's a good way to kind of identify potential resistances. And the reason that works is because a moving average is a visualization of the contention between supply and demand. I'm not going to go down the whole rabbit hole because I know people hate when I do that. But,
no, it's okay.
If you got a supply zone up here and a demand zone down here, you can think of a moving average, as long as everything stays balanced, as a line in between them, right? Because that's where the average price will be. Now, if these are skewed and you've got them descending over time, like let's say they're walking down, right? Like let's say you've got a period over here, a supply zone, right? And it's higher. And then you've got a demand zone and it's higher over here historically. Right. And then it steps down a level. That moving average is going to have a negative slope because you're moving that level, that mid-level, down into the lower price ranges, and vice versa to the upside. It's just going to have a positive slope at that point. So there's a couple ways you can do that. Now, another really cool trick you can use is you can see how they're stacked, right? So if you've got the longest one on top, the middle one in the middle, and the shorter one on the bottom, that tells you that it's beautiful.
Mm-hmm.
The most recent price action is below middle term price action. Middle term price action is below long term price action. That's an aggressive downtrend. So that tells you the strength of the trend by looking at how they're stacked. So that's another way you can use them. You can also look at the distance between them. That's another way you can use them. There's all kinds of different ways you can use moving averages. You just have to understand them. That's all. You have to understand what they represent. So again, I'm not going to go down the huge technical analysis rabbit hole and give you guys a 2-hour lecture, but I just want to show you guys kind of some different implementations we can use.
Absolutely.
Kind of what they mean. Yeah. Now they are relative to their time frame because they're looking at numbers of candles. They're not looking at periods of time. So this is a daily chart. Each candle represents 1 day's price data. So what we're seeing on the daily time frame, just as an example here, is relatively flat along all three. They're pretty consolidated, pretty flat. Now, if I open this up to the 5-minute, you can see their slope negative. Right? We've got a bearish impulse. Bearish impulse is starting. Right? The lines are separating. They're going down. They're stacked bearish. We'll see where this goes. This is not a confirmation, but you can tell this is a good opportunity for bears or people who buy puts to look for opportunities in their preferred direction rather than trying to go long, right? So if I was looking for a long, I would probably just wait. I'd wait and see where the price is going to end up.
Have a little patience, right?
Yep. That's what it is. Just it's telling you when not to trade.
Yes, Tesla's dropping pretty hard here, about to break back into the 160s.
Absolutely. So let's go ahead and slap some fib extensions on there real quick. Which one? Oh, I think I drew it long. My bad. I apologize. My first time. Yeah, we'll do this. There we go. All right. So it didn't quite get down there to the 161, but we're decent so far. So Now the level that it's probably going to test is going to be in this area.
I like that extension you drew on there. That's pretty nice.
Yes, I like that so much. That's a separate lecture. I'm going to turn these moving averages off. Did that make sense, or do you have any more questions about those? That's a really good question.
Yeah, I think it was a great explanation.
Thank you. And also, there's different types of moving averages. That was a simplified or smooth moving average. There's also the exponential moving average, or EMA. And this is a different calculation. It's not just a straight average of closing prices. There's a little bit of a weighted factor in there, which, again, I'm not going to get into right now, but we teach it in the PBA.
Right.
This is more reactive to price because of that weighted factor. So you can see the EMAs are going to be a little bit more responsive to price. I like the 2040. I like the 5813 if I'm trying to day trade. Some people like the 20 and the 55. Some people like the 18, 22, 54. There's all kinds of different combinations. I'll tell you right now, none of that matters.
Yeah.
It really doesn't matter. There's no golden set of numbers. There's no magic rule with EMAs. It really just depends on the stock and how the stock reacts. So what you want to do, rather than going into a ticker, looking at the chart and saying, oh, I'm going to apply these numbers to it, what you can do instead is put the EMA on your preferred time frame when you see that setup that you're looking for. If you're looking for confirmation, I'm just going to enact the 5, 8, and 13 real quick, and I'm going to shut off the 20 and the 40. And then you look for where it's historically respected, right? And then that will tell you on that chart at that time, that is a good setup for those numbers on that chart. So then you go to another chart, you might get completely different numbers. So rather than saying, I'm going to use the 20, 50, and 200, you might say, I'm going to start with those and adjust them until I see what actually is respected on the chart, because these are all going to change, right?
Yeah.
So let me go ahead and try those. I'll just throw the 20, 40, and 200 just for fun. And then, you might just change them, right? You can move them up, you can move them down. That's all I'm going to do. I'm just going to move these into place like they're little support levels.
Yeah, I like it.
Yep. So this one, you might get the 341, right? You don't know until you back out and look at it, see what it does. This looks like a pretty stable level. You can see we've got a support kind of rides it here. We got a little test there. Came close there, broke through hard, acted as a resistance, bounced off it pretty hard there, gap down right there, rejected. So 341 seems to work really well on the daily for Disney. So let's go to the next one. Okay, and I'm just looking to see where we're getting some good matches on this red line here.
Yeah,
this might be
looking for patterns, looking for patterns.
Where does the price reject from this EMA? So I'd say maybe the 126, right? And then I'm just going to go and, oh, that's a little too high. See, you can move it back down. Just kind of move it into the price. And when the price turns around and it starts touching those EMAs consistently, and it's tested from both directions multiple times, I would say 25, 126, 341 works pretty well for Disney on the daily time frame.
Yeah.
And you can see
just patterns on there. Yeah.
Absolutely. And that's all you got to do. So I didn't know any of this when I went in, but look at how well this respects this line.
Very well.
Yeah.
Good pattern. But look at the possible H pattern on Tesla forming.
Oh yeah. Yeah. This is H-shaped continuation all day.
I like spotting those. It's good opportunities there.
Absolutely. So let's give Daydreamer another little golden nugget here. So when you have an impulse from a supply zone to a demand zone, okay, so we got a boom, right? And then we got one of these, okay?
Yeah.
9 times out of 10, when you see an impulse to the downside or to the upside, any impulse, you are likely to see a 25% pullback 90% of the time.
Yeah.
Okay. Oops, I drew it a little bit off. That's okay.
Close. It's close.
I haven't done it for a while, so I'm getting worse at it. 9 times out of 10, this 25% bounce is going to happen. Now you have to be prepared for that one time when it doesn't happen. Most retracement setups are going to look for a load in this area, and I kind of went over that on the live stream yesterday. I don't want to repeat too much and kind of bore everybody who is sitting there for that. But basically, we use the retracement tool as a measurement to see how something pulls back after an impulse. So that kind of gives us insight into how many people are taking profits, how many people are jumping into it on the pullback for continuation. So 61.8% specifically is the golden mean. That's the healthiest pullback point because that's the best balance between buyers and sellers. 50 to 61.8% is pretty good. You get this about 60% of the time. This is about 40% of the time. Anything between this zone, this 25% level, and this 50% level, any entry taken within there, we consider taboo because it's very dangerous. This is indecision territory.
Risky.
Yep. This is rejection territory or confirmation territory. So you might see the price pull up into this area and shoot back down. You wait for a confirmation. You grab that. It's a beautiful play. Or it might break through this, retest it, and then continue out. That's a reversal at that point. So this is continuation. That's a reversal. But 90% of the time, we're going to get this 25% pullback. So if you can identify those and the risk reward is good enough and you see a confirmation below the halfway point between 0 and 25%, you can trade those super consistently. That's what I used to do all the time. You just don't want to do that on short impulses because that's not a lot of profit there. But yeah, most of the time, once this 25% pullback is resolved, price typically just turns around if it's not strong enough on that recovery, and you get this kind of H-shaped continuation to the downside or to the upside. And that is typically where most people get caught because they see the price starting to pull back up. They take an entry right here, and then it just falls off, forms a new low, and keeps going. And then at that point, you're holding a bag. You don't want to let go of it. You think it's going to come back. You sell a couple days later. Yep. And then it starts to pull back up and it recovers. And then you slap yourself in the head. You're like, why did I sell? Right? That's that big vicious cycle of compromise. And that's just because you don't necessarily understand the mechanisms at work here. But we can avoid that by understanding. We can just break this up into pieces, right? So we've got the impulse. That's phase 1. We've got the bounce. That's step 2. Continuation is 3. Longer term recovery, a couple days sometimes. That's 4. And then 5 is the actual decision, whether or not it's going to resolve this price level or if it's going to go higher or bounce off that level later. That's typically how it goes. But this is where most people sell. This is where you should sell in most cases. This is where you should buy back in if you did sell for a better entry in most cases. Again, every chart setup is different, but most people buy here and they sell here, or they buy here and they sell here when it's not quite up there yet. So you just got to be careful about when you're buying and selling, and don't guess, right? That's our big thing is if you're not trading what you know and you can't identify stuff, why are you trading it?
Yeah, exactly.
Trade what you know, study what you don't, and don't hurt yourself in the meantime. Yeah,
I mean, I always say, if you can't trade with confidence, don't trade at all until you can get the confidence,
Absolutely. That's where it's at. What are a couple tickers that might be good to try the confirmation below 12.5% to ride to 25%? Gator asks. Gator, that's a great question. And the truth is the impulse just has to be big enough. That's all. If you're trading options, obviously it's a smaller range. If you're trading stocks, you might want it to be a bigger range. It just depends. I'm sorry. Let's look at Disney here, for example. I'm going to just cut these EMAs off. Hopefully that made sense. So this is an impulse, right? We've got nothing but lower candles here for the most part. So you're just going to basically draw that, right? You draw your fib down the length of the impulse like you always do. Once you see a validated bottom, that's when you can draw it, right? Remember the rule here that I like to follow is I like to see candle, 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 candle. I'm going to have to move these a little bit. Okay. So the rule that I like to follow is that when I'm looking to identify a validated low, I want to see at least 2 candles to the left, at least 2 candles to the right that don't come down here and challenge this bottom. Right? I want this to be isolated. Once I see that, once I see this second candle form, we can draw our level. We know exactly where our support level is. And this is where we can look for that trade opportunity. But if this level right here is below 12.5%, and we see that volume come in, we see a confirmation of some sort, then we can take an entry. We just want to make sure that we're below that 12.5% level because we want to have greater than 1-to-1 risk reward. So anything below that is automatically greater than 1-to-1 risk reward because if we stop out, the loss is guaranteed to be smaller than the profit if we were to win one, lose one. So that's how we make net profitability. So that's kind of a really quick summary. I only went through that quick because I know you know this already, Gator. But if you have an impulse like this, right? Like let's just examine this impulse right here. Okay, and I'm still keeping an eye on Tesla here, but it's kind of fading out for a little bit.
Yeah, it looked like it wanted to recover, but it's kind of running out
Nah.
of gas and stalling out. I think this H pattern will probably work out here.
Yeah, I think if this was going to recover, it would already be up here.
Exactly. It's running out of steam.
Yep. All right. So in this case, right, we've got, actually, let me add those specific levels to this and I'll get rid of all the other ones because we don't need anything else. We're just looking for the 12.5 and 25%.
25. Yep.
Okay. So our goal is to find a confirmation in this range, okay, and then enter it down here with a tight stop, and then take profit at least, or lock in some profit at that 25% level in most cases, or at least start to look for an exit at that point. So in this case, if we have this big impulse, we see our validated candle right here. So if I'm looking at this left to right in real time, okay, I see one candle, I see two candles. So at this point, this low is validated, okay? So then I look over here to the left, and I don't see any lows really, or any highs except for this one maybe. Or I could use the high of these candles as a kind of an entry threshold, but these are still above the 12.5% level. So this tells me this does not have good enough risk reward on this time frame, looking at it within this context. So I'd really have to skew this out or look to the lower time frames to kind of justify a trade here. Even though it hit, it's still very risky because the risk reward just kind of wasn't there, right? So, ultimately it depends on the strength of the impulse. And that's kind of where we get into, let's see if we can look at a different one here. So let me just erase these drawings. Like this one, for example, right? Let's look at this one, see if that one would have given us a better entry. So in this case, no, because we still, our 25% level is roughly where these are breaking up, and then we failed. So there's no need to enter these until we see ones with good solid potential. Now looking on the daily time frame, admittedly, is not the best place to find these because you're not really looking for strong bounces at that point. These are more like trend oriented. So it really just depends on the time frame and the strength of the impulse. So let's see, I don't really see any good ones here, at least not on this time frame. So let's go down to the 15, maybe the 5, maybe the 1, right? Let's look at the 1 minute. This actually looks like a pretty good area here. This is a good strong impulse. Let me just look back throughout the rest of the day, see if there's anything else. That one maybe, but these two candles coming out of this bounce are pretty rough, right? They're very high in comparison to the length of the impulse. So I don't think that would have been a good opportunity. Plus, it's within the first half hour, so it's very risky. Relatively flat all day. We got this fella here, but this is only, it's like 30 cents, right? So you got to take that into context too. You got to look at this price axis. H-shaped continuation also applies to the upside, just as a reminder. So we got to be very mindful not to just look at it as bearish stuff. So if you're someone who's interested in continuation and stuff, you can also look at it there. So I'm really just looking for impulses like this, really strong impulses to the downside. Granted, this is the 1 minute time frame. So we've got this high. We got pretty much all lower highs all the way down until like here, but we don't have a validation until right here. Okay, so this is our validation candle right here. We got 1, 2 to the left, 1, 2 to the right. So this is definitely our validation candle. Now we would need to draw a level, and we need to, oops, I gotta, there we go. I'm just trying to line these up with the levels. All right, so I've got the high to the low, okay? And let's just draw 12.5, 25. Okay, and we're just gonna see if we can identify confirmation below that 12.5% level. I do not. So again, this is an instance where we just wouldn't have taken that trade. Now, granted, this one hit and it came up and tested the 50 and got rejected and all that stuff, but it really just boils down to the mindset. Like, we don't need to trade these. And this is about $1.50. I'm sorry, this is, yeah, about $1.50 price range on a $99 stock. So it's a very small window. So even though it was a good impulse, right, we identified that, it just didn't go anywhere. Nowhere that we could really use.
Yeah.
If you're okay with smaller profits, yeah, trade those all day. I don't care. But if you're looking for more consistent, more stable trade opportunities, it really is beneficial just to wait until you see those more solid impulses, like this one here. We knew, right? Remember the live stream yesterday? We knew seeing this low right here, all the way up here. Every single one of these candles, except for this guy, this one right here, formed a higher low. Every single candle, all along this way, except for these guys were a little bit level. So if I draw a fib right here, right, this is the first significant pullback. This pullback here, specifically right there, was less than 25%, which told us we were likely to see a new high, right? So we know that if this is the 1 out of 10 times where it doesn't happen, right? So in this case, we didn't have to necessarily lock our profits because we knew that this was likely to continue. Once we saw this big green candle and it pushed, we just moved our stop losses up. And then in that case, it came back down, tested the 50, and then it just kind of held this range for the rest of the day and kind of burned everybody with theta. And then it sold off hard into the close. This is why you don't want to hold SPY contracts, especially 0 days, because they will eat you alive. But this impulse right here is beautiful, and we can still use the fibs to measure that because we understand what it represents. And that kind of told us what we were likely to encounter in the future without necessarily having to risk anything significant, right? We locked some profits, and we, quote unquote, caught the top here because we just waited until the impulse stopped. Once you no longer see candles forming higher lows, that marks the beginning of a potential pullback. That's when you can lock in some profits. So you don't even really need to make it complicated at all. You just see a bunch of candles in a row that aren't forming lower lows on the candles until here. And boom, you can show off to all your friends and family and say, I bought the top, or I sold the top. You don't want to buy the top of an impulse.
Exactly. Yep. I agree.
And voila, you're a trading guru, right? All you've done is just watch shapes and colors, and you've just made sure nothing breaks down. You might not catch the absolute top, but you can see that the impulse is still nice and strong. People are still pushing it.
Yeah.
People,
the pressure's still there.
Yeah. And then once that goes away, you can just get out if you want. You're at profit.
Someone asked, well, what do we think about the Bitcoin and Ethereum drop this morning? Bearish or holding new support? I mean, in the grand scheme of things, it wasn't really a big drop. I mean, I know it's down 4% right now, but I'm seeing some possible support, like probably around like the mid 28,000 area, around there maybe.
Yeah.
So
look at that. That's nice.
Ethereum.
Yeah, I don't remember drawing these levels, but here they are. So it looks like it's holding. It came into the box.
Yeah,
look at that.
It's holding up.
All right. Yeah. It's crypto is its own kind of world, right? It responds to two things, right? External influence and internal influence. So if you've got a catalyst such as some regulation or maybe some crackdowns from some regulatory agencies,
right?
That's going to introduce a lot of fear. It's going to tell people, yeah, I'm going to pull my money out, or maybe the banking sector starts to pick back up. They get more good news or something like that. That's going to take a lot of the money that was put into crypto back out.
Right, and back into the banks if they start stabilizing.
Yeah. Now that internal influence is when you see stuff like this, right? If I see this and I'm in crypto and I don't know the future and things are going crazy, I'm also going to take my money out because I don't want to lose it. There's no point in maintaining unhealthy risk exposure based on something that, just it's going to keep happening, right?
Right.
So
yeah.
Why not just enter here, sell here, enter here, potentially sell here? It makes no sense to hold something like this, right? Because then you're just going to give all those profits back.
Yeah.
So yeah, I mean, that's my personal approach. I don't keep a lot of money in things like this. I actually don't trade a lot of crypto myself personally because I live in New York and it's a pain, but I make more than enough with stocks and options. So I guess I don't really need to deal with crypto.
Yeah, you don't need the extra risk,
Yeah.
For support level on Bitcoin, I'm thinking 28,750 probably be support. Just looking at Bitcoin on the 1 hour chart and zooming all the way out. 28,750 was resistance back there on the hourly chart. And I would think maybe it's going to flip to support now. So I'd be looking right around 28,750 on Bitcoin. If we can hold that, and maybe we can retest the 30,000 level again.
Absolutely. And guys, if you're wondering how to draw levels, just go to a high time frame, zoom all the way out, see where the price turns around. That's as hard as it has to be. There is really no wrong answer because all you're doing, you're not turning the price around yourself, right? You're not forcing the price to turn around. So if you draw a level and it doesn't turn around where you drew that level, that's okay. just try again later. But all we have to do, wait till the price turns around, look at it historically, make sure it's happened a couple times, make sure it tests it from both directions, and look at the volume at those levels. Granted, it's a little hard to do that in Webull because you can't really see the volume. But that's really all you have to do for support and resistance levels anytime, really. And then all you're doing, like you're not buying as soon as something touches a level. You're not selling as soon as something touches a level. You're going to see how it reacts to that level. So if you drew a resistance level right here, for example, right, and it came down and it pulled back up, and you don't see a confirmation here to sell, you can absolutely ride it all the way up into the next level because you didn't see it respond negatively to this level. So there's no reason to panic at that level or automatically sell. You can certainly lock some profits if you'd like to, but I see a lot of people cut themselves short just because of a line they drew on a chart. It doesn't have as much significance as you feel like it has, especially when you're in the moment and you're making decisions. So you don't have to sell right at a level. You can add some padding to it and treat it as a range, and then if it kind of falls out of that range, sell it. At that point, you want to lock those profits. But just because you drew a line on a chart and you don't, it's the magic part. You don't have to be right? You're just drawing a line to help you understand the chart. You're not drawing a line because price is going to automatically respect it.
We're trying to get an edge. We're trying to get an edge. That's all it is. That the lines aren't 100%. But if we can trade and get a little bit of edge, that's kind of what we're after here.
These help you outline the story. It's a framework, right? You're just building a frame for like a house, right? Each room.
I got a good question for you. Someone wants to know if the fib retracement, it works just as well with crypto, don't it? Because it's all price action.
Absolutely. Actually, it typically, in theory, right, it should work better for crypto because you don't have external catalysts like that to the same degree. But it's so I don't want to get too philosophical here, but Fibonacci is just a balancing ratio, right? There's a lot of complex math behind it, but ultimately you're just determining. Actually, let me just draw this out real quick. I'm not going to go too far. DBAC, look at that.
What's DBAC doing?
Nothing on the 1 minute. It's flat or nothing. Yeah. It's a pump and dump. It's not really pump and dump, but it runs up and then sells off hard. So, I mean, if you look at your fibs, right, all you're doing, let me just draw a little bit of a chart here. All right, so boop, 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 boop. Right, this is all we're doing. Okay. Let me move this down just a little bit, and then I'll move this up just a little bit. I'll kind of show you the difference as we go. So let's say this is your impulse. Okay, you've got an impulse and a retracement. Now, think about this like I think I used, Mount Everest as an example last time. I'm not going to go into that whole rant, but when you see an impulse, right, every impulse has a retracement. A retracement is just a correction in the opposite direction from the impulse. So all we're doing is we're taking this distance.
It's like a healthy pullback,
Yeah, and where you're taking this distance, and all we're doing is compare. Oh, drawing too many here. You just take this distance. Ignore the line, right? At this point, we have the distances. That's all we really care about. You're just taking this distance and comparing it to this distance. Assume they're the same width, right? Is what ratio of this box is this box? It's about half, right? It's a little less than half.
Yeah.
So if we just label this as buyers and we label this as sellers, we have a difference here of this. Okay, which means this many more people are down here waiting to sell.
Yeah.
They've bought right here, right here, right here, right here, all the way up. People are buying all the way up. People are selling all the way down, all the way down. And then you got more people jumping in right here. Right? So you've got participation all along the way, and all these little blocks here add up to potential sellers in the future, existing sellers who are out of the trade now, and the previous buyers that just participated in overall, right?
Yeah.
And that's it. Like these two boxes, these two right here, fill this box. All these little blocks fill this box. This is just the summary. These are all the buyers. These are all the sellers that have sold, right? or I'm sorry, these are all I confused myself. These are all, yeah, these are the sellers that sold. These are the future sellers that are still in the trade from down here.
Yeah. Mm-hmm.
Right. So all the
stop
retracement
losses and stuff like that.
Absolutely. So when it's time to sell, these people are going to engage, but they're not selling yet. So there's no point in trying to make them jump the gun. Now, if I had a shallower pullback, okay, these ratios are going to change pretty dramatically.
Oh, yeah.
So let me actually just get rid of these little guys. So now this is my total participation. Okay. And we've only sold this many. Right? That's it. That's all we've sold so far. It's just that many. Yeah. So now that leaves this many people to sell. Okay. So when this happens, you've got a few people that have sold. You've got a lot more people that jumped in, kind of adding to that pile. But ultimately, you've got this many people that are willing to sell a lot more intensely at a later time. So when we see these shallow pullbacks, they tend to run up faster and higher, but then they sell off much more harder.
Yeah, almost matches the run up. The sell off almost matches the run up.
Yeah, absolutely. And that's why I use that's why I use the Mount Everest analogy, because if you think about it, you got 3 climbing teams, right? They each start at base camp. They all try to get to the top. Okay. Mm-hmm. You got group 1. They go up really fast. They come a little bit back down. Maybe they're like, oh, we should rest for a little bit. And then they don't rest long enough. They just start going. They're already exhausted. They just start pushing higher and higher and higher. They're going to get hurt. So they're going to have to come down that mountain a lot faster. So they do get higher than the other teams, but they have to come back sooner because they're going to die. Otherwise, there's too much pressure for them to get back down the hill. Then you've got the opposite side of that. You've got people that have gone this reasonable amount, right? They've gone up the same distance as everyone else. They decide they get tired. They want to come back to base camp, maybe resupply, get some hot chocolate, get warm, but they come a little too far down the mountain and then they have to walk even farther to get back up. So they're not going to come back all the way up. They just give up, right? And they just go all the way back down. That's a bearish reversal.
Oh, yeah.
Then you got the healthy group that has a plan. They're properly equipped. There's a good balance. They get up the hill just the same as everyone else. They come back down to a reasonable base camp. They rest for the right amount of time. They re-equip themselves, drink a little bit of hot chocolate, and then they continue to push at a more reasonable pace, and they go much higher and they make it to the top. And then they come back down safely, right? So that's kind of the analogy that I use to explain the Fibonacci's. And really, it's all about just measuring this pullback, right? How much of an impact does this pullback have on future price action? Is it going to be more buyers being more aggressive and burning out quicker and falling back down? Is it going to be a nice healthy mix? Are they going to come down far enough to kind of reload, aka load the boat,
right?
And then push at a healthier pace and make it to the top? Or are they just going to come back down too far, already gassed out, already burned out, realize they have that much farther up to go and just give up, right? So once you can kind of internalize that, you'll understand fibs a little bit better. But ultimately, it's just a measuring tool. It's not a buy and sell signal. I hate when people say they're going to buy at 50% fib or 61.8% fib. You're gambling. You're just blindly buying something because it hit a level. Horizontal support and resistance is the same exact way. If you're just basing your buys on the fact that something hit a level and you're not waiting for a confirmation off that level and there's not good risk reward, you are gambling.
Yeah, basically. It's always better to have more than one thing telling us something than just one thing. So, just because the price hits a certain level, well, let's couple that with maybe some particular candlestick patterns or maybe some RSI.
Gotta have volume.
Volume, buying and selling volume, buying and selling pressure. We got to be able to kind of put a couple things together to give us more confidence before we enter a trade.
Absolutely.
So I totally agree with that.
Absolutely. So the other thing I wanted to kind of gloss over here, and by that I mean ramble for a half hour, is your trading opportunities, right? But once you identify these levels, it's great, right? You've got them all mapped out. You don't have to redo it again in the future. But we really want to identify the ones that have the best characteristics. And this, I think, is where a lot of people get kind of messed up. Because they see the levels, they see a reaction to a level, and they buy, right? They don't consider, or maybe they do consider the risk reward, where they're going to put their stop. Once you identify all your levels, you really only have to identify like 2 or 3, right? The areas of the highest value with the best potential. That's what we want to trade. We don't just want to trade stuff because it's at a level. We really want to make sure it's got potential to push off that level and make a good run. Okay. Yeah. So in this case, DWAC is a terrible stock in my opinion, but it's fun for runs. You've got this range here, right? All I did is plot the levels where the price turned around. They're just horizontal structural support levels. You've got two ranges here that I've identified, and they both have the characteristics that I like. One of them contains a gap, right? These are the farthest apart lines of all these. You got this zone here is far apart. This zone here is far apart. The ones that are really close together, you can't really trade a whole lot in between. So you have to be careful not to look for trades just in those areas, because that's where you're going to get pinched. You're going to hurt yourself. So this upper level here has gaps, right? It's got a good clean run upside, good clean run at the downside. It's got a good strong rejection there. It's got big, beautiful candles right here. Good turnaround right there. This is a lot of action in this area, and it's a big wide open area. Okay. This is where I want to look for trades. If I'm a lion and I'm trying to chase down something, I'm going to look at a wide open field where I can catch it. So, because I don't want to go hungry. I don't want to waste energy. I don't want to hurt myself or fall or get stuck in tight corners and stuff. And then down here, you've got a similar setup. It's got a nice wide range here. We got good, strong support to the upside, good, strong support to the downside. And it's got a lot of good price action. It's got a full candle right here. It's got almost a full candle right here. It's got good volume, right? This is what we like. Volume. When it's coming in these areas, we want to look at the volume.
Yeah.
Got a gap here to the upside. We've got good turnaround here. We've got a good bounce off that level there. This is the opportune areas where we're going to start looking. So what I like to do is I'll just draw levels like this, and I'll just wait for this one specifically because it's the lower one if I'm looking for longs. And I'll just wait till the price comes in here. Okay, and this is the beauty of having watch lists, because then you don't really have to worry too much about trying to catch everything.
Yeah, exactly. Just circle back to your watch list and get an update for yourself. Yeah,
absolutely. So this is kind of what I would like to see in the future, right? Because I'm not going to care about trading this whole trend. I'm only going to care about trading right here and right here.
Yep.
But I know that if I wait and I'm patient and I do this for a bunch of different stocks and can keep track of them efficiently, and I'm only trading the ones with the best potential and the most confident trades, I'm going to have a much better time in the stock market than people who are just blindly buying because it's hit a level.
Yeah, I mean, you're going to have a better win rate for sure.
Absolutely, yeah. And you get to keep those profits. Now, if I buy here and I set my stop loss here, that's okay. I have a stop loss. I manage my risk. And this is the cool part, the level, since this is the widest gap in this area and this is the widest gap in this area, the next level down, even if I miss my stop loss, is going to get caught a lot sooner than it would if it fell into this channel and fell all the way to the bottom. So if I measure the height of this and I compare it to the height of that, it's less. So I automatically have a greater than 1-to-1 risk reward ratio. It's built in. That's why I like to do everything with risk management in mind. Then I don't have to worry
technically, if you keep your risk reward at 1-to-1, out of 10 trades, you only got to win 6 trades to be net profitable. So
yeah. 5 you break even.
People are so concerned I need to win all my trades. But if you do a great job with your risk reward, keeping it, risk $1 to gain $1, keep it 1-to-1. Yep. In theory, you only need to win 6 out of 10 trades to be profitable. So
and people are terrified.
Keep that in mind. Yeah.
Yeah. People are horrified to lock in losses. I would rather lock in 5 smaller losses than 5 big losses. So
absolutely. Yeah.
It's okay to take those losses. You just have to do it gracefully.
Yep.
That's all.
I agree.
What's up? Arch Knight, you got a hot mic. Are you asking a question? I'm sorry, it's hard to hear you.
I think maybe it's just a hot mic there.
Okay. All right. Yeah. Well, hopefully.
And I did hear what he said. He's something about inflation is going down, but prices are still high. We got to kind of dig a little bit more into that, because I don't think inflation is coming down as much as people think it is. And let me see if I can pull the data from last week. It's not giving it to me. But I actually believe it came in, the last CPI and PPI reports came in right in line with forecasts. But it's not coming down. We're still very far from the 2% target the Feds have. We're still up in 5-6% area. It might came down like 1/10 of a point or something like that. But we're still way off from 2%. And I think they're going to keep interest rates elevated for some time, you guys, probably another year or two with the interest rates. I don't think they're going to start pivoting and decreasing interest rates probably until 2024 sometime.
No, and that's why we're seeing a lot of the price movement up, though, is because we haven't had the doom and gloom news necessarily. They're just saying that they're not necessarily going to make things worse yet. So,
right.
So that does restore a little confidence in the market, and that's kind of what you're seeing here. So I think a lot of people are going to look at Tesla here as well because it's starting to flicker.
Yeah, and actually, just to brush a little bit more about that CPI. CPI, yeah, I got the reading from last week. CPI, which is one of the main metrics the Fed used to gauge inflation, actually increased last week. Yeah. The last readout was 5.5%, and the readout last week was 5.6%. So inflation actually increased a little bit. Okay, you guys. So inflation is not coming down. And we might have had some decreases in the past couple of months, but it actually just upticked 0.1% last week. So
nice. Okay. So I just drew a little outline of a day trade. You guys, obviously, I'm not telling you to take this. I'm just saying this is what most traders, I think, are going to look at right now on Tesla in the 1 minute. Now, we are getting a lot of volume. What we don't see here is magnitude. We don't see big order sizes.
No.
We do see some bot activity. We have a symmetry bot here. Can't see its counterpart, but we see a 174.05. This was 174. Now, statistically, this is likely to push up into this wall. And then we have several smaller walls. We have a small one here at 173 as well. So we get a couple smaller zone recovery algos on this, but mostly it's going to be some manipulation to the upside. So this is what people are probably going to be looking at with a tight stop. Now, as you can see here, this also has a 1.5 to 1 or higher, I believe. Risk reward, it's got greater than 1 to 1 at least.
Yeah.
So this is probably going to get interesting pretty soon, as long as that volume can sustain. Just wanted to highlight that really quick while we're watching.
Yeah, it's a beautiful thing. It's a beautiful thing.
Yeah. Now, as part of that, we have a higher high that's validated now. As long as this candle closes below it, that would be a higher high. And then I think a lot of traders are going to look for a higher low and then the push.
Right.
So this would be an earlier entry based on the volume. So we'll keep you updated.
Yeah, let's see if it keeps making some higher lows and maybe get that impulse move up to that yellow box you got up there.
Yeah, it's got the flicker. That's what we'd like to see, but it doesn't have the magnitude. So this is actually kind of interesting. This is a type of manipulation. So this might also be a trap. So
could be.
They might just release it to like right here and then drop it.
If it wasn't for the earnings, maybe it would be a better setup. But with the earnings in play and the reaction to the earnings still being digested, we just got to be a little more careful in those situations.
Absolutely. So I'm just going to draw a line right there too, because I believe that's probably where they're going to reject it if they do release it to the upside and the volume can't sustain. Those who have been watching my streams for a while, there hasn't been a good volume threshold test. We're going to see that at the 174 level. And for those who don't know, basically it's just a bot placing a wall to manipulate it. It's going to measure the amount of orders that are filled at that level or right below that level in comparison to the orders that are placed. So it's going to do a little bit of a test. And that's, you're seeing these smaller walls kind of get added. If the rate can be exceeded, they'll pull the big wall to split it up into 2 walls. Usually it's equally sized. So here we go. So I want to see a good mix, red, white, and green. We're not going to see the white after hours probably. I want to see good order size, and I want to see good acceleration. So the order that I want to see those in is the mix, then speed, then acceleration. And then we'll see a release. So we're getting a good mix here. I'd like to see a little bit more white, though. It's a little tricky after hours.
Yeah.
But we can see the red and green is kind of interspersed. Here comes the acceleration. It's got to accelerate up into this level. I want to see this wall.
It's going to be a magnet there to that 174.
Yeah. All right. So now we're getting speed, but not a good mix. So this is interesting. And I want to see at least 500 or higher pretty consistently. That's my area code, 518.
Get some 400s and 500s in there, it looks like.
Yeah, just consistent order size.
Yeah, it looks like price is getting close to that 174.05. A little bit of liquidity there on the ask side.
Yep. Here we go.
It's flirting with it.
I'm watching this 173.99 wall. So If you look at this right here and these prices, you can tell when it's about to get ready just by just look at this top number here and just pay attention. Is it going up or down? Is it flickering red, green? And what's the order size that's next to it? Just watch that. Once you see that kind of criteria stick, then you can kind of follow it down, and then you look at the pattern that it forms, and then that's a pretty good indicator that it's likely to go up or down. So we're definitely picking up on speed. This is pretty consistent now. It's kind of think of like a river. We want white water.
Oh, there's a big block order we just went through.
Yeah. We got to see all three of those at the same time, right? We got to see each one of those enter in its order and then all happen at the same time.
Yep. I like it.
Hell yeah. Don't get fired. You can't be a full-time day trader yet.
Watch the streams at work. Hey, man, if you can get away with this, more power to you. More education, right?
Absolutely. Yeah, your boss doesn't want you watching this because they don't want you to leave.
Yeah, they don't want you to quit and come trade full time.
See these big orders, 2,000. That's what I'll scroll down to that. 2,000, 21,000, 56.
Those are the big guys. Yeah.
About 6,000. Yeah, this is what I like to see.
Price is pushing up into your blue box up there.
Yep.
Or is that green box? Green box, yeah.
Yeah, it's one of those.
Blue, green, I don't know. Maybe I'm colorblind.
It's all good. So now you can see that big order that was split. Now it's on both sides. This is now in zone recovery mode, which just means it's going to trade one direction or the other, whichever fails. So just to draw it out, I don't know, because you guys know I like drawing. This is art class with Bob Ross here.
Yep.
So you got a level here. You got a level here. This is the walls, right? And then you've got a little bit of a volume threshold test in the way on both sides, okay? Now, when price comes up, it's going to chip away at this first. It's going to measure the rate that those orders are filled. If it exceeds a certain threshold, a certain ratio, then it will pull this order. It will pull this order, and it'll move it up, move this one up, and then it'll reset that range. But it also takes this order right here, this actual wall, this huge wall, and it will split it, okay? And it'll place some of it down here, some of it up here, and it'll let the price kind of do its thing in this area. And then when it exceeds one wall or the other, it's just going to move more walls here, basically. That's all it does. Say it breaks down here and it breaks through this wall right here. Say that just gets chomped through. It's going to execute bearish orders and it's going to run the price down even harder. So that's what zone recovery is. We will not dive into that too far because it's a lot. But we are approaching this level of potential rejection. So this is where we find out if it's a trap or not. So a lot of people are going to start locking in profits pretty soon. But ultimately, that's all that's really happening on this order book right now, is what I kind of drew a picture of. So we did just get our bid. There we go. Perfect symmetry. Look at that. Woo. All right. So here's our make it or break level. We see good mix, good speed, decent order size. I'd like to see bigger orders though. So it looks like we're going to push into the level and I want to see if it's going to break through it. So here's where we really want, yeah, good mix. Look at the speed, man. I like this. Now we want to see that magnitude. Otherwise it's likely to get rejected. That's getting rejected. There's nothing. It's got nothing. Are they going to surprise us? By the way, for the record, this is the worst possible place to take an entry. But that's what you're seeing. You're seeing a lot of entries. Now, I'm bearish on this particular area. I believe we're going to get rejected, pull back, and then reattempt it. But we'll see. We'll see what happens.
We shall see. Well, it's about 4:59 p.m. It's been about an hour. You got any closing remarks or anything like that? Closing thoughts?
Well, let me see what Gator said here.
Yeah, he's got a question.
More what you look for when it's said to follow the volume while also trying to avoid entering and what might turn out to be an exhaustion volume candle. Yeah, that is a little bit tricky, and that's hopefully I answered that kind of when I went through the order book stuff. The time and sales tells you when stuff is filled, at what level, and on which side. It doesn't tell you whether it's a buy or a sell. It just says whether it's filled on the bid or ask. The order book shows potential orders, and that's kind of more manipulation or potential. So if you can identify your levels and that matches with the order book and you see that volume flood in and you see those three criteria, the fire triangle, as I like to call it, that's following the volume. That's a healthy confirmation of volume. If that setup starts to fall apart, or maybe your levels don't necessarily match this, or it just doesn't make sense that you see a level somewhere and it's getting rejected, and maybe one of those sides of the triangle is missing, that's typically manipulation, and you're probably going to get faked out or something like that. So hopefully that helps. But ultimately, it's hindsight and practice that's going to teach you that. There really isn't a set of criteria that's very strict. It really depends on the stock and the event, right? Like this is earnings volume. It's not. It's all speculation. It's not the same as a company announcing a split, for example, or bankruptcy. Like it depends. So yeah, I think I'm good. Do you have anything you wanted to mention? We got some good questions today.
Yeah. No, we had some good engagement, some great questions. We went over quite a bit, some great technical analysis, explanations. We got to witness the Tesla earnings, which Tesla hit a high of 183.50, sold all the way up to 170, 161, and now it's just kind of hanging out in the mid 170s. So still down 3.4% in after hours. But we'll see how the price continues for the next 3. We still have 3 more hours of extended hours trading, so we'll see what happens with Tesla there, and then obviously have some more data in pre-market. But yeah, no, I don't have anything else for today. We'll be back at it tomorrow morning, bright and early.
Absolutely, we do this every day, all day, every day.
Yes, sir.
It's good. Thank you all for hanging out. I'm glad we got Daydreamer fired. If your boss wants to come here,
be careful. Don't get caught. Don't get caught.
But I mean, hopefully you guys can see how easy it is to kind of quote unquote pick the top. We're just identifying areas of rejection, areas of support. That's all we're doing. It's not, there's no crazy rocket science. It just takes practice. And you have to give yourself enough time to develop those skills. So if you're frustrated that you've been trying to trade for a month or a week or 2 years or something and you can't figure it out, it's okay. Nobody gets good at this in a very short amount of time. And
we need time and practice. It does wonders.
Yeah. Everyone's time frame is different. It took me a very long time to learn. So even if you've been doing this for a couple of years, it's okay to still not be good at it. You just have to.
We still learn stuff every day,
Yeah. Identify your obstacles. That's what's going to get you farther. Identify your personal obstacles and then your technical obstacles. Don't just dive into technical analysis. This is cool. It's a nice little party trick, but ultimately you got to be able to control yourself. Otherwise it doesn't matter. So
Exactly.
All right. With that said, Daydreamer, start off slow and steady, man. That's good stuff.
Slow and steady wins the race.
Yeah. All right. Let me end the recording before this thing runs and makes a fool of me, because that's not a rejection at that point.
It's going to bounce right there and go to the yellow box. I know it.
Probably is. Yeah.
All right. So have a good night, everyone. We'll see you later.
Yes. Thank you all for showing up.
All right. Cheers.
Bye.